do the anyway. This is the wrap up for the live market open for Thursday, January 21st. Today is D-Day, Draghi-Day, and that's the main event today. We're still in a doom and gloom atmosphere in markets, but perhaps the worst is already behind us. Yesterday we had some good news from the UK, a bit of a slowdown in UK wages, but the unemployment is down. That helped the pound stabilize after Carney said that it's not the best time to raise rates and hit the pound quite hard beforehand. US core inflation went up as expected. Other figures were mixed. 2.1%, that's in theory good news. Another sort of good news, I mean, not going extremely dovish, was the Bank of Canada. It surprised or partially surprised by not cutting the interest rate, left it at 0.5%. It enabled the Canadian dollars to strengthen. They're waiting for stimulus from the government. They got a hint that the new government in Ottawa is about to enact stimulus, and also the weaker CAD is already doing their job for them, so they're keeping their ammunition dry. Okay, and but we did hear from the Bank of Japan talking a bit about more stimulus, and also from the government, because they're nervous about the strength of the Japanese yen. These safe haven flows are perhaps too much for them, making their exports uncompetitive, and they don't need such a strong yen, especially as oil prices are low. Okay, that's it. And yesterday we had a crash in stock markets, but it didn't in the United States. Eventually we had some big bounce on the just towards the finish. That's why the worst may be behind us, but probably not. In Asia, we had the Chinese authorities, the People's Bank of China, inject more cash into markets, but stock markets were still down also in Asia. So they were down in Asia, down in the United States, but it could have been worse. Okay, let's look at a few charts. Euro dollar tends towards the ECB's decision. Let's talk about that in brief. The ECB is not expected to change policy, but it might give us a hint about what it'll do in March. It's sort of a mixed picture. On one hand, inflation is lower and global markets look worse. On the other hand, the ECB already did a lot, and there is opposition from within. And the ECB also would not like to give us big hints that it cannot fulfill later on after that big disappointment in December. All in all, it's a very open picture. No changes expected. Follow the live coverage on FX Street for everything you need to know. It'll be quite an interesting press conference at 1:30 GMT. Other events for today, well, it's mostly Draghi today, but also in the United States we have jobless claims as in every week, and they're expected to be more or less the same, around 280. Philly Fed index, it's going to be bad because we know manufacturing is poor. For the Canadian dollar and for markets, once the echoes from Draghi move away, we have the crude oil inventories. It'll impact the mood. Too much oil will have weaker, will weaken the Canadian dollar, but also sort of exacerbate this risk-off mood. And just before the show tomorrow morning, Draghi will have an opportunity to talk again. Maybe once again he'll do some kind of damage control. He'll be speaking in Davos, Switzerland, at the World Economic Forum with all the rich people in the world. Okay, let's look quickly at charts. Levels to watch euro dollar, on euro dollar, 110, 110.70. On the downside, 108, 107.10. Pound dollar, 141.20 to the downside, 142.25 to the upside. Currently balanced, nothing from the UK today. Dollar yen, look for more talk from Japanese authorities. Around 117, 116 to 118.30, I would say, is the wider range. Dollar CAD finds here really nice support at 144.40. 147 is high resistance. If oil prices continue falling, the sky is the limit for dollar CAD. Aussie dollar showed some strength. 69.50 emerges as resistance, 68.30 as support. Look for news from China overnight. Chinese stock markets have the biggest impact. New Zealand dollar got a few blows this week from the CPI and from milk. 64.25, 65 is resistance, 63.50 is support. Those are the main currencies. Of course, First and foremost, left, right, front and center, or whatever that expression was, it's the ECB, it's Mario Draghi. Worries about inflation, readiness to do more, worries about the exchange rate will all weaken the euro. An approach that of a wait and see, on the other hand. We already did enough. Not afraid of deflation will, of course, strengthen the euro. I look for something in the middle, and I find it hard to project where exactly in the middle that will fall. My only guess would be that we're currently trading in a very frustrating range. For example, this morning, around 50, 60 pips, and I believe the ranges will be much wider than that around the press conference. Okay, so hold tight. I don't think we'll have what we had last time, this huge leap. Of course, there is Morgan Stanley that said buy euro-dollar 2 and ride it until 113. There's always a possibility over there. And there is also a possibility that we'll have a crash if the ECB tells us it'll do more to battle inflation, do whatever it takes. And it includes, it intends to cut the deposit rate, announce more QE, and but we're probably going to have something in the middle, which will cause lots of action.